largely, across the globe, across the board, we're witnessing all the key markets react to, trade jitters which have been going on for the last couple of days. First, Donald Trump over the weekend sent out a tweet saying that they will go ahead with fresh round of tariffs on Friday on Chinese imports. China also seems to be not taking it down too well. Fresh commentary coming in this morning as well from Donald Trump saying that the fact that the trade talks are not going down well is because of China and they will be paying for it. Let's touch base with Margaret Yang, market analyst, CMC Markets, to get in her perspective as well. Margaret, hi, good afternoon. There's absolute carnage, massive volatility, massive conjecture and uncertainty across the globe when it comes to US-China trade talks and what will finally be the outcome of it. But at this point of time, how are you assessing, especially markets back in Asia, emerging markets react to this development? Do you think the volatility and the jitteriness is likely to continue?
Hi, good afternoon, everyone. Yes, I do believe that volatility in Asian markets and also global risk assets is going to continue for the next 36 hours because that's the time when the U.S. is going to officially raise the tariffs on 200 billion of Chinese goods. And the likelihood of the tariffs to be officially implemented is really high. And overnight, we have saw that China official, they have announced a plan to carry out retaliation methods if the tariffs are raised. So it seems like the trade negotiation is not going into a very good direction, even though China Vice Premier Liu He is flying to Washington tonight. So there are tremendous political and economic uncertainties ahead of us. That's why Asian markets suffered from huge losses this morning, from China markets to Hong Kong to India to Singapore. It seems like there's a huge demand for safety right now. And we saw that equity markets are broadly lower, whereas gold and the Japanese yen, all these safe havens, are having a decent rally. Another thing we need to look at is the strength of the U.S. dollar against emerging market currencies. Actually, the offshore renminbi, Chinese yuan, has fallen against the USD for a fourth day. So this currency depreciation could potentially accelerate the capital outflow from the greater China market, and it will have a negative impact to the regional markets because ASEAN economies are highly reliant on China imports. So I think the sentiment is likely to remain cautious in the next 36 hours until we see a clearer picture of how it's going to continue in the trade talks.
Right. Do you think this will be an important development as far as growth estimates are concerned?
Sorry, again?
Do you think this will be an important development to track as far as growth estimates, global growth estimates are concerned, the amount of tariff that is put, and what is the global growth linkage to that?
Yes, that's a very good question. IMF has estimated the impact of additional trade tariffs on China economy. So if 25% tariffs are implemented on 200 billion Chinese goods, it could drag down China's economic growth, GDP, by 0.5%. And if additional 25% tariffs are implemented to the remaining China exports to the U.S., it could potentially drag the economy down by more than 1%. And that's a huge figure. So in the first 4 months of the year, we have seen that there's a global cyclical downswing, and China economy has shown signs of stabilization in March and April. But if the tariffs are going to be implemented, it could easily break this stabilization of China economy and accelerates the economic slowdown. And the real impact will be tremendous because it would not only impact the investment sentiment, but also the capex and hirings and business investments across China. So I think that the outlook is kind of mixed. And markets are preparing for a worst-case scenario of a potential trade talk breakdown. And that would definitely lead to a slowdown in economic growth in the region, not only China, but also the economies in Southeast Asia.
Right. You've given us a very clear picture about how China is, poised to be impacted by this. But can you also help us understand how are you reading into the impact that emerging markets could be also factoring in, or could be, bracing themselves for?
Well, okay, so one, we can break into the outlook into two parts. One is how is this trade tariffs going to hurt China economy, and second is how will the trade negotiations affect China policymakers' the action towards exports and imports, and how are they going to change their trade policies. So one possibility is that the trade talk ends with a positive tone, and China regulators, they start to open up the economy and allow for more competitions and allow and transform into a more market dominate kind of economy, and that is going to be a long-term positive for not only China but also the global. And the opposite is that China is going to step back from the current reform, and they carry out these retaliation measures against not only U.S. but also U.S. allies. So it's more of a step back in their reforms. So that is the worst case scenario that market don't want to see.
Right, and when we just look at what markets are pricing in, what do you think markets are pricing in? How do you think markets are approaching this deadline? Earlier, whenever this sort of news came, markets said that nothing is going to happen, but this time around the street is anticipating that there would be some measures.
Well, I think right now markets are pricing in the high likelihood of the tariff implementation, whereas market hasn't priced in the tail risk of a total breakdown of the trade talk and a full-blown of U.S.-China trade war. So I think the tail risk lies on the new Cold War, a Cold War in an economic front between the world's two largest economies, and that could potentially lead to a further economic slowdown or even a recession. That's the tail risk, means that the likelihood is low, but the impact is huge, tremendous. So I think the market are not prepared for the tail risk yet.
All right, Margaret, great chatting with you, and really appreciate you taking time out to chat with us and sharing with us your perspective.